We should be live, everyone. Let's get going. We're back again, Fabio and myself. It's gonna be an exciting session. We haven't done this in quite a while. I'm gonna explain to you why. And obviously, I want to address our retrenchment. I don't think it's a retrenchment. I want to address our right sizing in the company last week and what happened there, so that you also have a bit of an understanding. And then we're going to go to all the goodies. We're going to talk about the market. We're going to talk about Binance. We're going to talk about the potential recession. We're going to talk about Bitcoin ETF, Ethereum ETF. We're going to talk about DeFi chain, meta chain layer. My goodness, there is so much stuff to discuss. Fabio, how are you? How are you doing, sir? How is everything? I'm excited. We're back again. It's cool.
Yeah, it truly has been a while. It was, yeah, it's always a roller coaster, and it kind of there's like a red straight line. It's not only work; it's crypto, it's my personal life. Many things have happened, and but it's exciting, and I actually this is maybe one of the spaces or the live sessions that I'm most excited about, because when you do this every single week, at one point there is very little to talk, or it's somewhat repetitive. And I think this session today is not going to be repetitive. So I'm looking forward to the session.
Yeah, me too. I'm very much looking forward. Maybe let's kind of get in just some housekeeping. If you're the first time listening to this, we used to do those almost 2 years every week straight, and then there was just so much stuff going on in the company, kind of stuff that you all kind of found out exactly a week ago, and I just really had to focus on some stuff and sort these things out. And every hour that I would do, I mean, also then on my personal channels, you've noticed I did very little social media stuff there and YouTubes and so on, just because I really had to focus on the company and sorting things out. And yeah, but now the stuff is sorted. We're focused. We're ready. Fabio and I had a bit of a discussion if we're going to do this on a weekly basis. Maybe we're going to do it on a bi-weekly basis. We'll see. Let's see how this goes. It may be that we're going to transition this a bit more and doing it only for elites on the company. We'll see. But for now, we're going to do this as it is right now. And then we'll see. If there's enough content, we're going to do it maybe on a weekly basis. Otherwise, we're just going to do it bi-weekly. So if you're not following us on YouTube or on Twitter, it's a good time. Then you're going to stay up to date on this. Maybe first and foremost, let me quickly address last week. And I want to address probably, I think I need to address two things. The first one is all the right sizing. We let about 50 people go. And I want to address, what does this mean for Bake? And I think for a lot of the DeFi chain investors, they also want to know, what does this mean for DeFi chain? I want to address that. And the other thing, why did we do the retrenchment when just a couple of weeks ago or months ago, I said, hey, look, we're doing really well. Everything is fine. We are hiring. And now suddenly we changed our mind on this. First and foremost, I think as most of you know, not everyone in the executive team was aligned with this right sizing. Our CFO had actually voiced this for almost a year. So for a year, he already had been voicing that we should right size. But especially me, I kept pushing back, but he was, eventually he was right. Our HR team was very focused on this, and I think everyone on the executive team kind of understood this, but doesn't mean that not everyone, but majority of the executive team was aligned with this. Also, and I think a lot of people made a big deal out of this, that not everyone was aligned. Look, this happens. I think the more complicated the decisions are, the more things are at stake. You're not always going to be aligned with every decision. And that's totally normal, right? Don't read too much into it. Don't read too much into it if someone wants to make a public statement on this. Look, there's different cultures. There's different backgrounds. Don't read too much into it. And I think that's a key thing. And at the end, I was actually quite happy. Initially, I was really unhappy with the date and the time, but we couldn't change that. There's just a lot of things at stake. You have to actually talk to the authorities here in Singapore, with the employment agency. So it's just a lot of things that you kind of have to align. And at the end, I was a bit unhappy that it's happening just before the DeFi chain hard fork. But at the end, I was actually quite glad that this was kind of the timeline. We had a large upgrade planned on Bake. And we also had to delay this. And so we're pushing this now to maybe the next week or the week after. Let's see. But it was just a lot of things coming together. And sometimes you don't have control over everything, and you make the best of it. So a lot of people ask, why did you do it right before the day? But look, they're just things you can't always control. And and then you just have to kind of go with it and make the best of it. And I'm actually quite happy. I think we made the best of it. I think the hard fork on DeFi chain went really, really smoothly. Sure, I mean, there's always improvements, but I think it went smoothly. And then just yesterday, we had another upgrade on Bake. We launched Cardano. We launched Near. We fixed a lot of the bugs. So on that, I'm happy actually. So maybe the first question on why did we do this right sizing? And actually, most of the right sizing actually impacted a lot of the experiments, a lot of the ideas, a lot of the things we tried out. And so the focus now is really on the core business. It's really on those things that are working. It's really on those things that are generating revenue. And this is going to be where the biggest focus is. And so actually, we are not expecting to lose any revenue with this right sizing. We only focused on cost in this sense. And the example I want to give is, imagine you are making a certain money and you have certain assets in the bank. That doesn't mean that you just keep spending and you just don't look at what you're spending on. You still kind of compare and say, hey, look, if you go to a great restaurant and let's say you always go to the same restaurant and you love going to this restaurant, but then after a month you realize, hey, maybe actually you want to go to a different restaurant and you don't go to this restaurant anymore. That doesn't mean now that you're doing bad or that everything is going down the gutter. It just means you need to make certain decisions in life that are not always easy, and you have to cut costs on some things. And that doesn't mean that your revenue has changed or something. It just means you sometimes need to focus on those things. And yeah, a couple of months ago, if you'd asked me if we're going to do this right sizing, I would have said no. But I don't know. Sometimes you just have revelations. Sometimes things hit differently when people say this differently, or you have different examples, or people make comments on certain things, and then you switch your opinion on this. And I think that's important. And I know it's always difficult for the outside to understand why sometimes you change your mind, but that's just how it is. And I think in this case, it's not that I changed my mind on in a spur of a moment or something. It's just more I wanted to focus on the right things. So it's not so much I don't know, a flag in the wind. It's like there was a lot of reasoning, a lot of thinking through that. And at the end, what you would want as a customer, I would assume, right? What you would want is you want a sustainable company that's gonna do really well, that focuses on the core business, that delivers a great service to you as a big customer. And that's what you want, right? And I can assure you that with that right sizing, none of that has changed. We are fully committed. We're fully long-term thinking. And I think that's the key thing that I just want to address here. And it's more on actually bringing it back to where we're coming from and focusing on that core business. And so I just wanted to address that. I hope that gives you that confidence that, yeah, for us, we're really committed. The team is super committed. And actually, one thing that I feel a bit more is going from 170 something to 120. It feels more startup-y now. And being startup-y, if you've ever worked in a company, the startup-y is always, it is more exciting, right? There's the pace, there's the speed, the ownership that people have, the directness, less layers, because there's not two people for everything. Everyone kind of has more sense of ownership. And it was interesting. Fabio and I talked just before the Twitter space. I was actually driving home from the office. I was in the office the whole day, and I was in the car talking to Fabio. And we were talking about how the smaller team on various things is just making things way more efficient and way more direct. And I'm actually quite excited about this. So I wanted to address that. I don't know, Fabio, if you wanted to add anything to that. Yeah.
Just my point of view. So I saw the company grow from 14 employees to 180 over the course of 3.5 years, and it was super exciting, crazy. I never witnessed something like that, and I guess very few people do witness a company 10x, and it's a very messy process. And the thing that bothered me the most is I like to work, and I don't like to spend my time on documenting things and processes and tools. And of course, while you scale up a company, you need to have all these tools in place. So we implemented many tools, HR tools, process management tools. Some of you might know these names: Asana, Notion, whatever, and performance reviews, and a lot of bureaucracy. And I hated this from the bottom of my heart, because it just I hate to do these things. I rather just work. So many meetings and all of this, and this kind of bloated. a lot of things. So one or two things that are important to understand. So I focus currently. My work is extremely focused on TFC, on offering. And in this team, just I want to stress this: not a single employee was let go. Uh, Nothing on my side of the spectrum was affected in any way. And you, as a customer, especially using the retail, you will not feel any difference because, as Julian previously mentioned, the things that kind of got caught were more on the experimental front, things that we just tried out along the way. And then two things I see in the community popping up a lot. So first thing is we are now cash flow neutral. So no longer burning through money, which, as a startup, it's not a problem if you burn through money because you want to take risks, you want to experiment. And so that's the first thing. And the second thing is, Julian mentioned this many times, and we shared this in transparency reports. We have years of runway. We still do, especially if you are cash flow neutral, you don't really need runway. So these are two things that I see popping up in the community. For me personally, it's more exciting because there are a few facets that, for me personally, that I need to do less documentation and more work. And I see many people that joined very early that are kind of exciting about the times that are to come. Yeah, that's the only thing I would add.
Yeah, and one thing maybe just, and then let's talk about markets afterwards. One thing, just because you have the money doesn't mean that you always need to spend it, right? So it's the same thing. I mean, I don't know how much money is left over after your paycheck every month. It doesn't mean, let's say there's $200 over. That doesn't mean you just waste $200. And I don't want to say, and this is also, I don't mean that a month ago we wasted money. We always thought that this makes a lot of sense the way we spend it. But then at some point you realize, okay, maybe there are other ways to spend this more meaningful with better returns, better risk reward. And so that's the key thing. So so just understand that as well, please. Not that you think now we are like, I don't know, we're running out of money or something. It's really not that. It's really the foresight, the strategy, risk reward, focusing on the core business, and it's focus. I always think focus. And one thing, maybe to kind of before we transition in this, I once, as a year ago at Singapore FinTech Festival, I gave that talk on saying no and how important it is to focus by saying no. And actually, the saying no is so difficult. People always think that like the sacrificing just means you really do, like you really give it all in what you're doing, and that's true. But sacrificing always means saying no to certain things. And yeah, and the example I gave there, for example, was that at home I don't have a TV. I don't have a TV, and for a lot of people, it's shocking, right? They're like, "What? You don't have a TV?" I said, "No, we don't have a TV." And the simple thing is, for my kids, I just don't want any screen time. And one of the easiest ways not to have screen time with their kids is just not to have a TV there. And so, yeah, and for some families, I mean, yeah, that's sometimes shocking, right? So, I just want to leave you with that, right? A lot of success in life comes from focus, and focus means obviously doing a lot on some things and actively saying no to other things. In the company, we always have a no list. A no list always means that these are things we definitely don't work on, and at some point, you just, in the board meeting for Q4, you just make certain no lists, and not always easy. Sure. Great. Let's transition to markets. Fabio, my number one question here. Bitcoin is at what, 36, 37,000. I checked the last live we did. Bitcoin was hovering around a 30, right? Did you think that now we would be at 36, 37? What are your thoughts on this?
No, I did not think that we would be at above 30. And still, I kind of struggle to deal with the fact. You could say, okay, maybe I'm in denial, not denial, in
Denial.
disbelief. Uh, deni- we had denial.
these charts, yeah.
No, I'm not. I'm not in denial. I'm in disbelief. Maybe, but so look, and maybe that's a good start for the whole macro and the whole market section, because the thing that I struggle to kind of conceptualize is the discrepancy between reality and price. So, like the thing that I see when I look in the economy in Europe, in the United States, is the economy is not really in a good place. Like a lot of companies like the Citigroup, Amazon, Apple, like there's a lot of big tech that reduces their headcount. Yeah, we are one of the tech companies that kind of followed suit. And the unemployment is picking up. We have the price of money, so interest rates are super high, mortgage rates are super high. We still have the whole residential, not residential, commercial real estate, maybe bubble. There is many things. Maybe a recession that is coming. So the reality when it comes to the economy and also to crypto. It is not super exciting. It's not that we are bringing in tons of people. It's more, especially in the crypto side, fueled on a lot of ETF opium with, I don't know when we are going to get it. But for me, it doesn't really justify the prices that we see right now. So I feel there is somewhat of a disconnect. And maybe it's also, and I shared that on my personal Twitter and with a few friends of mine that are over on Telegram, that I'm still with approximately 20% that I actually wanted to be allocated into Bitcoin, into crypto. I'm still on the sidelines because I was expecting us maybe to retest 20,000. It's not a bad thing that I have part of my portfolio still in T-bills and in cash, but if we are at above 30,000, you actually would like to be allocated 90% plus, which I'm currently not. So there is also a bit of a personal bias that kind of plays into this. But I kind of see a disconnect. If I look at bond markets where the yields are consistently popping higher, or the repo market that is currently going to be depleted, all of these things, I've kind of the feeling that something bad might be on the horizon and that it is just a rally. But that's maybe a broad bird's eye spectrum just to throw out a few things. But what are your thoughts? Would you have thoughts that are this high at this point?
No effing way. No effing way. Really not. And also because nothing really changed. Maybe the only thing that changed is that people realized that the odds of a Bitcoin ETF and now also an Ethereum ETF are just looking really good. But no effing way would I have thought we're getting closer to 40,000 at this stage. Like, to me, the question that I debate a lot with friends at the moment is, of all the stuff, like all the price being priced in, let's say let's assume there's a Bitcoin spot ETF, right? And I think it looks very good. Like, the question is, I think now it's not so much if, it's more when, right? Some people say, we're going to see it end of November, beginning of December. Some people say we're going to see it before Christmas. I'm more in the camp that thinks we're going to see it beginning of January. But let's be honest, it does not really matter so much on the timeline here. It's really more on the when, and then how much of the hopium, how much of the price, how much of the excitement is priced in already? Are we at 5%? So it's basically nothing. And let's say until the Bitcoin halving, right? Because like that's a reasonable time frame. So around 5 months. How much of all of this is priced in? Is it 5%? Is it 10%? Are we at 50%? Are we 75%? Are we actually over already, right? Are we over the hump and we're on the way back down because basically everything is priced in already? I don't know. I think it's so effing difficult to give an answer on this. And my only gut feeling is that more of it is priced in already than most people want to admit. But I definitely think we're going to see like still a higher local high. I don't think we're going to see an all-time high in the next 5 months. I don't think so. But I do think we're going to see higher prices. The question is just really how much. Is it going to be 40? Are we going to see 60? I don't know. Some people are saying we're going to see 100. I don't know. What are your thoughts on this? That's to me the key question, basically, over the next 4 or 5 months.
There are two things. If I would go back 1 year and ask myself the question, is there going to be a front running of the halving? I would say yes, definitely. There is a front running of the halving, like we saw in 2019 as well, where we went from 4,000 to 14,000. And we may or may not see something similar right now, but now that we're in it, it feels weird. And the question or the thing that I struggle the most is I believe I'm super bullish on crypto. Like you have no idea. If I look at on-chain data, like 88% of the Bitcoin are not moving over the course of 3 months. Everybody's hodling. The liquid supply is consistently decreasing. The ETF, the halving. There's so many exciting things coming up, and I want to be bullish. I see the bullishness, but then I look over at all things macro, and I kind of just I'm scared because I kind of think that it would be healthy and needed to have somewhat of a recession. I'm not in the soft landing camp. I don't think the Fed will be able to do that. And I'm kind of torn in between. And sometimes I think maybe they are just going to be able to play this. Maybe they really are going to get this soft landing and then just ease into it in May next year. On the other hand, I think no. They can't be. They can't do this. It's impossible. So we are going to see a recession. So I'm really torn in between those two. And of course, if we are going to see a recession, we're going to have a somewhat of a liquidity crisis, and it's going to affect Bitcoin and crypto as well. So these are the two things that. Um,
What timeline? What timeline do you see? Like when I had my catch up with Crypto with Chris, I also talked to him about this, and I think in general we have the same kind of idea. I think where him and I disagree a bit is the timeline on what's going to happen when. How do you see this? Like when do you see the recession? When would you see that liquidity crisis a bit? How do you see this?
so honestly, there is something I want and something that's more realistic. And something I want is the recession as soon as possible. I want to have a liquidity crisis now. I want us to dump now. I want markets to break now. Because it then things align. The halving aligns, the ETF aligns. So I want to have the ETF next year. I want the halving next year. I want the Fed easing next year. But I think before that, we need to dump. We need to have a recession. So this is what I want, but you don't always get what you want. That's the bad thing. So I guess what we are going to get is maybe these things happening at the same time, so that the recession and the ETF may happen at the same time, so that the recession. So you always know in hindsight that you're in a recession. We could already be in one. We are going to know next quarter in January if we are already in one. So maybe we are going to see a recession in Q1 or Q2 next year, an official recession. And that's also where I would put the ETF. And if I would need to point to a Fed starting to ease, it's probably going to be the 1st of May. That's probably more a realistic outlook, not what I want, but probably more how things are going to turn out. And of course, hey, if they are going to be able to illustrate the soft landing and it's not going to dump and macro just keeps on chugging along, I mean, the NASDAQ 100 just made a new all-time high. I cannot believe
Yep, that's
this.
insane. That is insane. I agree. That's so insane.
It's crazy. It's absolutely crazy to me. I would never have guessed that with interest rates this high, that the Nasdaq. So the Nasdaq, the broader index, is close to an all-time high. It just made a new yearly high, but the Nasdaq 100, so the 100 biggest companies, they made a new all-time high, and I don't know how, but it's happening, and yeah. If look, there is a scenario, and there are people pointing that out that just say, "Look, we're just going to go higher. The Fed's interest rates, these things, they don't matter. The stocks up only." The same narrative that we saw in 2020, stocks only go up, and I can see this happening as well. And but I think it's not healthy. Is a recession along the way or in between would be more healthy. Yeah. What about you? Do you see us? Do you see recession happening? Do you see the Fed?
I am definitely in that camp. I am in that camp who thinks that the Fed is gonna let the recession happen intentionally. I think they're gonna use that opportunity then to, on the one hand, drive prices down, at the same time get interest rates down and refinance a lot of their debt. I think they are going to do this very strategically, and for them, they have to bite a bullet, and that bullet is: am I going to debase the currency like nuts, or am I going to have a short-term recession? And I think they're rather going to have that short-term recession, then refinance everything, and then have a little bit of a debasement of the currency. So I just think if they kind of try to cover that recession up front, meaning they front run the recession and really print money up front, it's going to go haywire, in my opinion. And I don't think the Fed is going to do that. I think that's going to be way too tricky. So my entire expectation in this is I'm still expecting uptrends up until probably Q1-ish, end of Q1-ish, around the halving. I'm more of a person that thinks, like you said, it's going to be more of a buy the rumor, sell the news. I think that really is much in line with the ETF, with everything. And I think at that point we do see some cracks in the economy. I think we do see it, and that's then when, like, we're going to see a bit of a downtrend. Liquidity is going to be a bit of an issue, and the Fed is going to start lowering rates. They're going to lower it together with the worse the economy gets. I am not in the camp of a soft landing. I'm in the camp of a hard landing. I don't think we're going to see a massive hard landing. So it's going to be let's call it a bit more of a hard touchdown. And that's going to probably happen around the summer. And I just fundamentally believe the way the Democrats are going to play the next year, they're going to have this hard touchdown over the summer. And then they're not going to go into the election with a stock market that's down. They're going to pump the stock market. And with that, they're going to pump crypto like mad. So I would assume, if you're asking me, Q1, I don't know exactly when it's going to turn, but Q1, we're going to see up. Then either at the end of Q1 or during Q1, the way down. Q2 next year, I would be surprised if this was a bullish quarter. Q3 probably as well. But then at the end of Q3, so September-ish, that's when we're going to see that turnaround. And that's a bit of my expectation. That's the camp that I am in. I think interest rates are going to go down more aggressively than people think. The current expectation is relatively slow. I think that's going to go more aggressively, simply because I am in the camp that thinks we're going to see a recession, a bit of a deflation. And yeah, I think in a year we're probably going to be smiling about the crypto prices again. But if you're asking me August-ish next year, I think we're going to see some pain.
Yeah, like what is most crazy to me, and I think the mistake that many people in crypto do is they underestimate. We all also underestimated Jay Powell and the Fed, because hey, as they have played this perfectly. Like where we are right now, of course, there could be a major blow up next year. But until now, my God, the fastest interest rate hike cycle in history. The economy is holding up well. Inflation is going down. Unemployment, everything is playing as it should. Like you could say, just looking at things as they are right now, Jay Paul did everything perfectly. Of course, if we are going to see a hard landing, everybody's going to say, see, they messed it up anyway. But there is also, like, I wouldn't put the soft landing at a 0% chance. And what baffles me the most is how well the economy held up, how high crypto prices are compared to the rates. And there is one thing that probably everybody can agree on. So Jay Powell said, I think in Jackson Hole during August or September, he said higher for longer, and they plan to have the interest rates this high until the end of 2025. And I think everybody can agree that this is not realistic. That
Very unlikely. I agree. Very,
yeah,
very unlikely.
because as you said, I think a third of all the tax money that currently the US takes in goes to paying off their interest. And they have major refinancing coming in 25 and 26, especially 26. Um, just one question for the things that you just mentioned. Do you believe that we go to ZERP, so zero interest rates again, or do you think we will find a base maybe at 2.5% or so?
Yeah, I don't think I'm not someone who thinks the Fed's going to risk that or do that again. I don't think they're going to get the support for that.
Yeah, same. I don't think we will go back to zero interest again. They learned that from their mistake. They saw how this plays out and that this is not feasible. But I think so. What they want to do, in my opinion, is they want to have a soft landing. They want to have a recession because it helps them. It helps them to have ammunition to lower the rates, and it helps them to drive the narrative. So I think what they actually, so they communicate one thing because forward guidance also influences the market. So just
Of
what he
course.
says is what we are doing. And I mean, go on to Fin Twitter or crypto Twitter. We always talk about him and how things are playing out as we are doing right now. So what they want to do is they want to have the soft landing. They want to have a minor recession and then just ease into the elections. So the stock market goes up and that's the plan. Um, if they're are they going to be able? I don't know. There's like two things that I see blowing up, or maybe three things that are currently at risk. One is for the bond market that you see, especially on the higher end, that interest rates are flaring up. which is dangerous. They would need to control that. The second thing is the repo market, which you can see depleting. If we continue the rate as we are depleting now, it's going to be Q1 next year, where something, a new free metal program would need to be implemented or something would need to happen. And the third thing is probably commercial real estate, which is kind of weird, but also nothing yet happened. Also, I mean, real estate prices didn't really move yet. So these things are variables along the way, but I think we're very much aligned on this. I actually thought we might have a few points where we disagree, because I saw many community members writing what you like about that format is that we usually kind of disagree in some aspects, and maybe if we're talking about more in depth ETF stuff, maybe there will be some disagreement. From the timeline perspective, I also think that January is most likely, but there are other aspects to it. I mean, what do you think about BlackRock not only filing for Bitcoin ETF, but we saw
But
both
Ethereum,
ARK and BlackRock filing for an Ethereum spot ETF. There were rumors for an XRP one, but they were fake. What do you think about the Ethereum ETF? How likely, when, why?
I give it the same chance as the Bitcoin spot ETF. I just think it's going to happen slightly afterwards, and I think that makes sense. I do think that the SEC is going to give the mother Bitcoin the front seat, and I don't know, probably Ethereum, maybe, I don't know, 1 or 2 months afterwards. I would be super surprised. And I've seen some of those kind of opinions, but I would be super surprised if all of them happen at the same time. So I would be super surprised if the SEC goes and says, oh, Ethereum with Bitcoin. I mean, that would be insane. Like, I don't think so. So for me, it's probably 1 or 2 months afterwards. The crazy part about the Ethereum stuff at the moment is that none of this, anything of that, actually has a positive positive effect on price. It's really insane. And I've seen some analysis on why this is. A lot of it kind of hints at the Grayscale Ethereum Trust, that it's pretty much the only institutional thing right now that exists out there. And so if institutional buyers want to get involved, they have to buy the Ethereum Trust, and the Ethereum Trust has no impact on the actual Bitcoin price because it cannot be arbitraged. So at least that's what I've seen. But I don't know. I'm in the camp that thinks that the Bitcoin ETF is going to have less of an immediate impact, but a stronger long-term impact. And I think a lot of people are kind of hoping for, oh, Bitcoin ETF coming out and bam, we're going to see a new all-time high. And I'm not in that camp. I'm in that camp that thinks, yeah, we're probably going to get over 40. I doubt we're going to get over 50. So we're going to be somewhere in there. Then I think we're going to go.
Or,
no, sorry, $50,000 Bitcoin price.
oh yeah, price,
yeah, 50,000 Bitcoin price. Yeah. I think there's going to be a lot of reshuffling of liquidity into the spot ETF, but very little actual new liquidity. So I think a lot of it is going to just flow out of existing products and not so much of the reshuffling. And then I know a lot of people saying, yeah, but look at the futures ETF. The futures ETF is cash backed, not physically backed. But the point is still, if you have a large spread between the spot and the future, it drags the spot up because people are going to arbitrage that. So I think it's in an immediate impact. I think the impact is going to be lower than most people hope it is. But in the longer impact, I think that's massive. And one thing I just want to highlight, and I think that's always a huge thing, right, that I want to give to people. Most people compare the impact of the Bitcoin ETF to the gold ETF, and then they always show, look at the chart when the gold ETF was kind of implemented and look what the chart did. Okay, I have a very strong counter on this, and I know maybe there we disagree, but the strong counter is this. If you are a retail investor, then investing in gold actually has always been relatively simple. Why? Because you can buy a gold coin, you can buy a little gold thing. It's actually not so difficult. Storing those things is not so difficult. Because you're going to find enough place at home that makes it easy to store. Sure, it's not as fungible. Sure, you cannot go in and out. You cannot trade this thing. But that is not the big money. The big money in the gold ETFs, if you look at the gold ETFs, are actually institutional investors, are the large funds, are the large things. Now, imagine you would have $1 billion and you wanted to buy gold with that. It is almost impossible to do this without an ETF because you're not going to actually get that gold out there. You're not going to put it into some safe. You're not going to store this. This is extremely difficult. It's really difficult. And I think that is why the gold ETF had such a massive impact. It didn't have an impact on the branding of gold. It had an impact on the actual liquidity and the actual access to gold, especially for institutional investors. Now, in my opinion on Bitcoin, this is fundamentally different. Now, I'm not saying it's worse. I'm just saying it's fundamentally different. Here's why. I think buying Bitcoin is easily possible for small and large investors today. And I know some people always say, but look at the large investors. Michael Saylor says it's not possible to buy $1 billion in Bitcoin today because the ramps are not there. Well, why would they be there with an ETF? With an ETF, they're also not there unless the liquidity is already in there and there's actually the trading volume. If that is there, sure, $1 billion, but that's a side channel then. It does not really have an impact on the actual price because it's just trading on the ETF and the ETF would get arbitraged, right? But the big difference on the ETF, on an ETF is the branding. In my opinion today, if you wanted to buy, let's say, hundreds of millions of dollars in Bitcoin, you can do that. You don't need to get a safe at home. All you need is you need your little ledger or you have some custody solution. It's not much different storing one Bitcoin from storing 10,000 Bitcoin. It's a huge difference whether you want to store one gold coin versus 10,000 gold coins, right? That's the up and the downside of either, right? The downside of gold is that it's really difficult to transport, really annoying to store, where Bitcoin is not so much of an issue. But what Bitcoin lacks is the branding. It lacks from an institutional standpoint, not in crypto, but as an institutional standpoint, it lacks the branding. It lacks the edification. It lacks that stamp of approval from Wall Street, from BlackRock. And that's what the ETF brings it. And I think that's so massive. But that is only going to play out a bit over time. And it's not going to play out where with gold is very different. There were people on the sidelines saying, I want to get access to that thing and I can't. With Bitcoin, in my opinion, it's going to take a bit longer. That doesn't mean that I don't think Bitcoin can hit $500,000. I still mean this. But I think people have to be a bit more patient than what most people are. I don't know if we disagree on that, but that is something that I really want to put in there.
So no, we kind of agree. So I think first Bitcoin ETF, Ethereum ETF later, it will come probably. But the Bitcoin ETF, let's say Q1 next year, and I think many people are overestimating it short term because I think we're going to open with 1 billion, probably, maybe with 2, but not a lot. But over the course of the year, we are probably going to add another billion every 2 weeks, and so maybe 20 to 30 billion within the first year, which is sizable. You know, if you overall market cap is currently, I don't know, 600,000.
Yeah,
Six,
yeah.
600
Billion.
600 billion.
Yeah.
And so it's sizable. It's like a 5%, and over the course of 2 years, probably a 10% addition. And the supply is not really liquid, so it's going to have an enormous price impact over the long run, not initially. And yeah, maybe we see buy the rumor, sell the news. It depends a little bit on what macro is doing. I also believe there will be multiple ETFs that are going to be approved. So the thing that I'm asking myself a serious question is on Bitcoin, the ETF makes a lot of sense because you have, I don't know, pension funds, sovereign wealth funds, slow money that kind of are looking for a vehicle like this, like family offices that. So what you need to understand, maybe for the retail investors listening to this, is a lot of families that have a lot of money, they contract one company or one guy to kind of take care of their money. And in a lot of situations, this is just one interactive broker account. Just one account, one interactive broker account, and
That's true.
somebody that's managing that account. And this account can currently not really buy Bitcoin in a good way. And for many people, this will open the gate, or then you can just call your guy and say, hey, take a 1% or a 5% allocation into this. And I think there are many people falling into the category, and it will take time. The thing that I don't really understand yet, of course, Ethereum falls also in this interactive broker category or family offices category. But one thing that I kind of struggle to wrap my mind around it. So for Bitcoin, it's not a cash flow generating product. It's like gold. It's debt. It just sits there, and it's okay if you pay somebody a fee to hold it. So an ETF is not for free. You pay a yearly fee over and over and over again to hold that asset. So you kind of pay for the service, for the custody, for the security, for whatever. On the Ethereum side, the slight difference is you're getting a yield if you're holding your Ethereum. You're getting 3 to 5%. And so the difference between paying a percent and getting 5% over the course of 5 to 10 years is a huge difference. So
Mm,
in a Bitcoin case, I would be a little bit open for an ETF. Of course, I rather hold it myself in cold storage. But on the Ethereum side, I would never even think about it because, hey, I get 5%, which is a sizable yield. And on the other hand, I pay a percent. Of course, there will be institutions, there will be family offices that are going to look at that ETF and they think, well, yeah, that's a good way. At least I have some exposure. But that's the main difference in that product. But I'm certain if the Bitcoin ETF comes next year, there will be other applications and other things that are going to be proposed and listed. And if you just look at what's happening regulation wise, I think by now there are four categories. If you just classify crypto, there are four categories. There is Bitcoin, there is Ethereum, there is stablecoins, and then there's everything else.
I
That's
agree. It's reality at the moment. You're right.
yeah. So next year is going to be, I don't know, it's probably going to be the craziest year since 2021. I kind of just thinking about maybe it's going to be towards the end of the year into 2025. So not a calendar year, but maybe, I don't know, let's say summer 2024 until summer 2025 is probably going to remind us a lot about 2017 or 2021.
I agree. I would probably push it by a quarter back. So I probably would say end of Q3 is going to remind us until the end of Q3 2025. That is something I can really align. Yes.
And a few weeks ago, or I don't know when, the crazy thing about these markets is always like through whole of 2022, I had a major feeling that I'm overexposed in this industry, that my allocation into Bitcoin is too high compared to cash, gold, equities, whatever. And now I feel I don't have enough. It's crazy, and it turns on a dime. In a bear market, you are overexposed, and in a bull run, you don't have enough. But I still think we have time to accumulate. I still think there will be a lot higher prices than we are seeing right now. Just the way or the road to that place, I'm very unclear on. Like long term, if I think 2 years ahead or 5 years, 10 years, I know it's very certain that we will see a lot higher prices. But in the short term to midterm, the road is uh, filled with variables and with uncertain turns that are so. I don't know. Maybe you can comment on that. I would be very much interested in because you've been active as an investor in more business cycles than I have been, and of course you have more relationships with people that have even more experience. The thing that I struggle to understand is a year ago or 2 years ago, I thought it's just don't fight the Fed, go along with the trend. Markets are pretty simple. I know how this works. And now, a year later, with interest rates at 5%, the market is making new all-time highs. Is this just an exception, or is everybody that kind of has the feeling that the Fed is influencing this, overestimating the Fed? How you have a theory on that point of the situation?
Okay. Now, my point is that the indexes, they are completely misleading. If you look at the S&P, for example, actually the majority of the average stock in the S&P is down this year. The reason the S&P is doing so well is because of the Magnificent Seven. And the Magnificent Seven, which is like all the large techs, right? So Google, Facebook, Microsoft, Apple, Amazon, Netflix, Tesla, and NVIDIA. So those seven, they're just doing so insanely well that they are taking these indices up. And everything else is actually down. And so why are these things up? I do understand a lot of the reasons why these things are up because of AI, and that's been a massive push, right? And so I do, and there's some kind of reversion to the mean from last year. So my point is here that actually, if you look at most stocks, they're actually down. It's just that these seven stocks are so killer, they are lifting everything up right now. And so my point probably is I don't know if those stocks are overbought. I don't know if those stocks are too expensive. That's very difficult for me to assess. And I do own some of those. I don't own all seven of them, but I do own some of them, and individually, and I own them in indices as well. But considering that the entire market as an average is actually down and just those indices are up, to me, actually fits with the narrative. It does. And I also, I mean, I would have never expected what happened this year in crypto, but I do understand, considering in Q1 that Binance really had to get out of stablecoins and really had to get into Bitcoin. And it makes sense that the market pumped so much in Q1. And I do understand why then the market pumped from the ETF hype, right? And I mean, if you consider, like, I don't know how much Binance pumped the market. I think the market pumped a bit, maybe let's say a bit over 30,000, maybe. I don't know how far the market went up with Binance. So right now with the Bitcoin ETF, it didn't even go up so much. Maybe it went up another 30, 40%. I think that's reasonable. If you would have told me at the beginning of the year and said, hey, look, the Bitcoin ETF looks really, really solid, how much do you think the market would pump? I would say, yeah, between 50 and 100%. So I think it is aligned. I don't think we are so far off. It just feels so weird. But Bill Ackman, I mean, he posted from what's his company, Perish, I think that's what it's called. And I think he's up like 15, 16% this year. It's not crazy, right? So it's not like, so I don't know. I'm not 100% sure it's so insane. It's just there's a couple of things that are doing really, really well. And obviously, us being in crypto, us being in tech, we have a strong bias now and think everything is up when actually most things are actually down. I mean, I think just yesterday, wasn't it just yesterday that Bob Iger from Disney had this emergency town hall, or last Friday, I can't remember. And he had this emergency town hall because the Disney stock is not doing well. And he has been now the CEO of Disney for a year. And we're talking about Disney, right? And then look, I understand Disney made some horrible decisions when it comes to how they kind of set their movies and how they set their characters and what kind of social kind of ideal they're following. And but it just kind of highlights that it's not everything is up. Actually, like it's very difficult in my opinion to invest this year. Bonds are down this year, right? As like long dated bonds are down. Gold and commodities, I mean, they haven't done insanely well, right? I'm not saying they are down. I can check. They're not insanely like yeah. I don't know. It's
So
okay. Yeah.
two things that maybe a statement and then a question. So we saw one of the biggest downturns in bonds, I think, since World War II. Bonds,
Mm,
long-term bonds, 20 and 30 years, are down more than 50% in 2 years, which is absolutely crazy. Like an
yeah.
asset class that you would consider extremely stable and risk-free is down, 50%. And the other thing that I completely don't understand is how both the DXY, so the dollar, and gold can be up. Like gold is almost at an all-time high. And the only reasonable explanation, and please, if you have something to add to this or correct me, is that many investors feel the same way as I do and are very uncertain. And that's the reason why gold is almost at an all-time high, because they think, okay, maybe there is something on the horizon. Maybe we are going into a recession. Maybe I need to protect myself. And they take an allocation in gold, or maybe central banks are buying. That could be one of the narratives. And then the other thing which I don't understand is, if you're anticipating a recession, is you would probably allocate your stock portfolio and kind of switch a bit into utility companies. But utility is doing terribly. So so many things that just seem counterintuitive to me, that I thought, and that's maybe the danger of this, after studying markets for, like, now for me it's 10 years or so, that I really actively study this, reading books, following fintech
It's not
Twitter
much
and so
longer for
on.
me either. I mean, yeah, it's not much longer either. Yeah.
And there was, maybe that's the valley of despair that I'm in right now, but I felt very confident that I know how to play the markets a year or two or three ago. Because of course I made some money. We had an up only bull run in stocks. I did fairly well in crypto. And then I thought, okay, the next recession, I kind of know how to do this. I need to have some utility companies. I need to have some gold. I need to have some cash. But yeah, my utilities are not doing great. Of course, I have some gold, but it hasn't broken all-time highs yet, and I'm not sure if there is no recession. Are we going to? And I still, maybe I own a bit too much in T-bills and cash, because the market kind of, I was expecting the markets to go lower. So of course, I made some mistakes along the way. Not terrible, or so I haven't lost a lot of money, but my allocation, I missed a lot of the rally that we had this year in stocks. And yeah, I under
How much
allocated
do you think the S&P is up this year? What do you think the S&P is up?
15%.
Yeah, 19. But the average, the average um, stock in there is actually down, right? So it's quite interesting. How much do you think the Nasdaq is up this year?
25,
No, almost 50.
50.
Yeah, 50, almost 50. But same
Wow.
thing. So a lot of the stocks in the Nasdaq are just tech heavy, AI, right? So that's why these things are up, and then and that's why this thing is just driving like nuts. I mean, a couple of funny things, right? So, do you think historically macro investors do well or macro investors don't do well?
I think they don't do well.
They don't do well, right? And it's I mean it's an old Buffett quote, right? That says like it's investing in macro is a fool's errand because like macro investors always find backward looking. They're similar, honestly, they're probably very similar to technical analysis, right? It kind of you're always backward looking. You always have kind of an idea, and you always kind of have an explanation. But like for example, I think like if we just look at gold, right? One of the main reasons, in my opinion, why gold is up is just of all the global tension. It's Ukraine, Russia. Sure, it's not as bad anymore as we had it 6 months ago, but it's still there. Then the entire Israel Hamas tension, right? I mean, there's tension. Then obviously China and so on. Like, there's just a lot of tension. I think a lot of these are reasons on why central banks and people are investing in gold, right? So I do think that, right? But I know we completely fundamentally disagree there. Gold historically is actually a really terrible investment. There are these times when gold is so strong, right? And it kind of slaughters everything. But then it just has a decade of constant underperformance. And gold had a decade of underperformance right now. So it could be that maybe now it's exactly that time again, like you said, and gold is going to slaughter everything. Could easily be, right? Could really easily be. Commodities, the same thing, right? If you're talking to anyone who has been investing on the last couple of years, they'd say like, oh, commodities, man, is the place to be. Like commodities, they return so well, right? And if you look at the commodity ETFs, and you look at them over long term, they're down, right? They're down over the last 10 years. It's just nuts. So these things are so difficult to invest in. So my point that I'm trying to make is, and so that was a funny analysis. Let me ask you this. I don't know if you heard me do that update, but I hope not. So then we can play this game. Imagine 5 years ago, I would tell you the only information I would give you. I'm a time traveler. 5 years ago, I would tell you we're going to see a massive pandemic coming. I'm not going to give you the exact time, right? So I'm not going to tell you the exact date or the exact year, but I'm just going to tell you there's going to be a massive pandemic and a lot of people are going to be dying and it's going to be quite brutal. And you would have to invest in something. What would you invest in if I would just tell you there's going to be a pandemic?
Bitcoin and gold.
Why? Why? I don't understand the reasoning. I really don't, because it's actually a fundamental problem. Also, if you look at the pandemic, Bitcoin and gold crashed. It only went up after the money printing started. So, I mean, unless you would know that the money printing started, I don't understand that reasoning.
Uh, okay, so with no knowledge, I haven't seen your update on that, but
Good.
with no
Okay.
knowledge, my expectations would be that governments are under stress, so it would be a similar situation than war, and these are kind of assets that I can self custody and that I feel comfortable
Okay.
in holding for a longer period of time. But
I
gold
would have
didn't.
said pharma companies.
Oh, yeah, yeah, of course, of course.
Okay, but if you had done this, you would have lost money against the S&P. Pharma companies dramatically underperformed over those past years. It's insane. They underperformed the S&P 500, right? So the point I'm trying to make is it is so insanely difficult based on these macro events to actually pick your winners because there are so many other factors, right? Exactly like what you're saying, right? I really don't think that, like, of course, today everyone says, this was so obvious, like, Captain Obvious, hindsight 2020. Of course it's Bitcoin, right? I get it. Like, I understand. Hindsight is so simple. So why did no one in 2020 buy Bitcoin like nuts? Why not? I know why. Because at that point, no one knew about it, right? Like, even though we knew the pandemic was there and people didn't buy gold and people didn't buy Bitcoin because they're all fucking panicking. So the point I'm trying to make is it's really, really difficult to invest based on macro alone. It's really, really difficult.
one question that it's a personal question, and I'm just gonna abuse
Yeah.
this stream to drop this. But I think many people might actually feel the same. So let's say somebody joined the markets or is studying the markets, and he's just maybe 1 year, 2 year, 3 years into this, and he kind of looks at an S&P 500 and he looks at an Nasdaq. And he just sees, hey, wow, these charts are at an all-time high. He goes onto Twitter, he sees all the crash prophets talking about the recession and a hard landing. What advice would you give to somebody like that? Would you, if you would be in that situation, would you start to dollar cost average your way into an Nasdaq at an all-time high? Would you just sit in cash? How would you play this? That's yeah.
So actually, it's such a great question because the question doesn't matter because all of us, basically, at every single instant in time when we have to make a decision, actually repurchase or rebuy, right? So that should actually be the mindset. So we should actually sit there and let's say right now we're making a conscious decision. So we all sit there and we think, how much money do we have? Okay, so let's imagine we have assets, liquid assets worth $10,000. Then actually you shouldn't be thinking on where these assets are right now, because then you have a so-called endowment bias, because you have this bias on where these things are in, and it's bad. You should actually think $10,000 right now. How would I invest $10,000 right now? So you're starting fresh. How would you do it? Right? And so that is actually always the question you should always ask yourself. I mean, I'm putting taxes aside and I'm putting like liquidity aside. I'm putting these things. Let's not put those. It's like a Duncan experiment, right? Like what Einstein used to do, right? So I think that's such an important one. And so for that person, I would probably tell that person the same thing that I do right now because I'm in the same situation. I would probably go
What
and
are you
say,
doing right now?
yeah, I would probably put a third of these assets into stocks. And I wouldn't be much stock picking because I think it's very, very difficult to stock pick. I would probably put a third into more cautious back off things, like you said, T-bills, cash, and so on. Just like I would have a third in that. And then I would put a third into those non-cash flowing things that can have these really crazy swings, right? That's your crypto, that's your gold, that's your commodities, and so on. And that's probably what I would do right now. And the reason just is because I don't have much conviction on what the next year looks like. I have a conviction that I think we're going to see this recession, crypto is going to do well. But I can also see a scenario where this completely flips around. And I just don't try to be right now. I just try not to be wrong. And
Why wouldn't you allocate into T-bills and get 5%?
all in?
No. But with a decent chunk of the money right
Okay,
now.
but let's say a third. Why don't you do a third right now? I mean, that's a third. And the simple reason is it's pure inflation. Like, I think the risk of you losing the money with T-bills, I would put close to zero, right? Because the government can just print money. But that just means maybe 5% in a year, like let's say $1.05 in a year is actually, the purchase power of that is less than what you would get for $1 today. So you maybe have more in dollar terms, but your purchase power went down. And I think that's the risk, right? And I think that's a reasonable risk because what if the government front runs all this and says, you know what, money printing galore, let's go all in. It's way too risky right now. We see everything kind of wavering, and that's just my thoughts on this. So I just rather sit there and say, I mean, look, I have very long dated bonds as well. I have like 30-year bonds actually, right? And when I bought them, I actually said, I hope I'm wrong on those, right? I hope they are a bad investment. And it's my dead honest answer. People don't believe this, right? Because people always think they make an investment and they always want to be right. And I actually sat there and say, I'm going to buy these super long dated bonds. And actually, and I mean, they're paying me over 5% every fucking year for the next 30 years or something, right? And I'm sitting there and I'm hoping this is a bad investment. Because if these things are a bad investment, what would mean? That would mean we're going to have money printing. This would mean we're going to have a flourishing economy, right? That's probably going to mean that my stock portfolio is going to do really well, that my crypto does really well, that the world does really well. If bonds do really well, the world is not a nice place. Generally, bonds don't do well if the world is all fine. So, and I mean this from the bottom of my heart, right? And I think a lot of my investments, I approach this way, right? So when I buy Bitcoin, I seriously hope that, I hope this is a bad investment, because when would Bitcoin do really well? Well, it either does really well if it's like, we're going to see the same kind of money printing as we had in 2020, 2021. And I think we're suffering from that today. I think a lot of the issues came from that. Or I think if all goes to shit, then I think Bitcoin is going to do really well. These are the craziest scenarios. So I would sit there and think, man, I hope it does well, but I hope it's not going to do so well. And I know a lot of people think, what a stupid idea is this? No. So I just kind of sit there and try to kind of I ask myself always, what would I have to invest in that I haven't done yet? Like, I what? How can I diversify? How can I take risk out of the plate? And I will play massive alpha. I will go and allocate a lot when I feel confident about something. And I mean, I just study people and I realize it's so difficult to be right. It's so difficult. Like, I know that people, just because anyone can invest, they all think they can be right. But truth is, it's I don't know, it's easier to win an Olympic gold medal than to be a really good investor. I know it's difficult to believe.
Yeah, no, that was actually super helpful. Look, the issue that I found, I'm doing well, but the thing that bothers me the most and that I'm terribly that I have some regret is I find it so difficult to dollar cost average into indexes right now. Like every single month, I do a little bit, but way too little. And every single
Yeah.
month, I kind of regret it, and I think, man, I'm buying an all time high here. This is actually, I really, I have with a lot of stuff, I feel great. Dollar cost averaging into it, taking an allocation, and so on. But with Nasdaq and S&P 500 or a global index like a Vanguard, All Worlds or so, I have a terrible feeling that I'm buying a local top.
I
That's
understand where you're coming from. I understand.
yeah.
I do.
But for the
But
rest,
but
look,
look, I also, I'm someone, right? And I mean, people, like, the number one question they always people always ask me is, how do you know when to sell? Like, why did you know to sell in 2021, right? And the answer here is actually a very simple one. It's not that I believe crypto is going to crash. If I believe this, I would have sold all. I would have shorted the market. My thing is, I look at my portfolio and suddenly crypto blows up so much in that portfolio that I panic a bit, and I sit there and I say, hey, actually, my targeted allocation is this, and suddenly it's this, and I don't like that. Let me shrink it down to that targeted allocation, and let me then see, where do I put these other things. So I do that exercise not on a daily basis. I do this on a, I don't know, maybe on a quarterly basis or something. Whenever I feel something dramatically changed, I really sit there and think, imagine I would have everything in dollars or euros or Swiss francs or whatever base currency you use, right? And then I'd say, how would you allocate this right now? If I don't know, if you had 100,000 right now, would you really go and put 80,000 of that into Bitcoin? If you had 1 million right now, right, would you put 800,000 into Bitcoin right now? Would you? I don't know, right? And if you don't, right, then let's say your portfolio is actually $1 million. Why would you have 800,000 in Bitcoin right now? Right? So that's the key question. That it should actually be the same answer. Obviously, keeping taxes and stuff in mind. That's a different discussion that I'm not going to have here. There's a reason I live in Singapore where I don't have to deal with this shit.
the funny thing is, this experiment, we talked about this maybe a year ago or so, or maybe 2 years ago, that you should allocate, every single moment you should rethink. But you know what the issue is? It is the computer screen that says you bought at 500, it currently sits
Of
at a
course,
thousand, and it's
of
showing up
course,
green, up
of
100%.
course.
And that's what's bothering me and others and other investors to really think about this as we should be thinking about that situation. And terrible. Like, the most terrible thing about this is I know that this is true and that I should be thinking like that, but I cannot bring myself to the point that I'm actually 100% doing it. I sit on some positions on some interactive broker accounts or my eToro that show with 200, 300, 400% in profit because I took them a long time ago, and I cannot bear it to sell it because it's crazy. But yeah, you're 100% right, of course. Look here
I
at,
tell you, I mean, depending on the taxes, right? I mean, one thing that if you don't have this tax issue is really just to sell it and buy it again and kind of reset the trigger. I know it at the end, it doesn't change anything, right? It doesn't change anything. I know it's so difficult. Like, these statements, like, actually the purchase price should have zero impact unless you deal with taxes, but should have zero impact on the sales price. But I know that it is a reference price.
so one question. We are 3 minutes too long
Yeah, I
already.
actually I need to put the kids to bed. So let's finish it up. I need to put the kids to bed. Do we have anything to finish up with? I think there's so many other topics we can discuss, but I think it was a great episode to start in. Is there anything we missed?
No, it was fantastic. Just a reminder: this is going to be recorded, so if you missed the beginning, make sure to listen on this. It's on YouTube, it's on Twitter, it's on Apple Podcast, on Spotify. We are going to do this again, maybe next week, maybe the week afterwards. And one thing I actually would like to talk about next week or the week after.
I think we should do next week. I think there's enough to discuss right now, Fabio. Let's do next week. We can just always commit. I mean, right now it's very simple. So we're definitely going to have next week because there's enough topics to discuss.
And I have a few questions next week about inflation and how to protect ourselves, and maybe, you know, over the coming 5 years or so, and also how you're going to structure your portfolio, maybe
Good
over
thoughts.
5 years and over 10 years.
Yeah,
cool.
Good
but
thoughts.
I really enjoyed this. I think it was an energetic session. We had many things to talk about. There were some juicy nuggets in it. For everybody that enjoyed this, leave us a like, leave us a comment, tell us what you want to hear next time. And yeah, super excited to be back.
Thank you so much, Fabio. Thanks so much, everyone, for tuning in. See you next week. We're back again. We're going to stay back. So that's really awesome. Thank you so much. All the best, everyone. Cheers.